this is Jay Harris coming to you from Tom's Trading Room. In this video presentation, I'm going to go over a feature in the tools called the Double Finder. Now, if you've ever found a stock or ETF that you believe is going higher or going lower, and you want to capitalize on that move by using the power of either going long a call or long a put, one of the features that this tool can do, called the Double Finder, is it will show you which option or which handful of options have the lowest percent to double. Now, percent to double means what percentage move does the stock need to make higher for a call or lower for a put, in which that option will show a theoretical value of a double of its price. So let's go up to the Searchers tab, hover over Single Strategy, scroll on down and find Double Finder. Now, if you clicked Calls and Puts or Double Finder, you'll get to the same part of the tools, because when you click on Double Finder, you'll see that it says Calls and Puts Double Finder. There's a help file on it that you can click on and read all about all of these different functions and the capabilities that this tool has. Right now, we're going to stay on the search stocks. We're going to select a new list. Instead of the penny and weekly list, we're going to left click on the drop down arrow and go find the DJ30, the Dow Jones Industrial Average 30. The smaller list of stocks, and these searches will happen a little bit faster because it's a smaller list. So DJ30, the wizards over here, these are the scans. You can choose the line item for the lowest percent to double calls or puts. You can look at what's called the highest probability of touch as a percentage for the calls and puts, and you can look for calls and puts by the minimum cost of each. Let's just go ahead for now and click on the lowest percent to double calls. You'll then go ahead and click on search, and it will show you a search output. It says 30 stocks found, the top 133 trades are shown. And what are we looking at here? We're looking at different stocks on the Dow. It shows their ticker symbol. You can click on the chart and it'll open up a new tab and show you the chart. But we don't want to do that. Let's click on pick, because when you click on pick, that chart will superimpose on this page. You can look at the chart with whatever indicators you have on it, and then you can left click on it and make it disappear. If you wanted to check out any news headlines or go to get a profile of the stock or any other information that you want on it, it will go to the Yahoo Finance page for you on that stock. But we're going to close and get rid of that too. What we want to focus on is right here. And you can see Verizon has 1, 2, 3, 4, 5 options. This column highlighted in yellow is your call percent to double. This is the percentage move necessary in the stock in order for that option at 59 cents to show a theoretical value of a double. And it's showing you that the stock, based off the last update for the tools, 56.69, the strike price of the call option that it's showing you is the $60 strike for August 21st of 2020's expiration. Now you can click on the hyperlink. It's green and it's underlined. That's the hyperlink. You click on that and it will go to your risk graph page. This risk graph page has a great deal of information, and there are many videos in our tools that will explain how to interpret the risk graphs. But what we want to show you right now is it shows you it's a $59 per cost or $59 per contract cost. And if you want to know what that percentage, and I'll go back to that previous page, it says a 5.5% move higher is what's needed. What you do when you get to the risk graph page is scroll down to the bottom, and here's your risk graph. And again, videos will explain all this. There's a replication of the candlestick chart. Scroll all the way down to the bottom, and you see in this statistics and probabilities box area, the days to expiration, the percent to double. Now, the red is 63 days left. That's from now till expiration. The blue is a quarter of the way through, 3/4 of the way through, and then at expiration. And you can look at the percent to double at each of the different time intervals. So if the stock goes up 3.4% right now to 58.64, you could potentially double. If you have to wait all the way until expiration where there's 0 days left, the stock needs to be at 7.9% higher, or $61.18, to show a theoretical value in double the price of that option, which means that 59 becomes $1.18, and you've got a potential double right there. So what you have to determine, folks, is do you believe Verizon can get up to that price that it needs to double? That comes from further analysis that you've done And we encourage you to make that analysis prior to coming to this page. If you have tools like a money calendar that can help you assess a potential price target, or any other tools that you have a gauge on, I believe the stock is going to X price. You then come down, look at the double finder, and see if that price target that you have is showing up on the percent to double column down here. If it does, if you believe that the stock can make that price, then you maybe pin your ears back and consider this option trade. Now, a couple of other things here before I get done with this video. Let's go back to the calls and puts, the double finder page. We did this for the call percent to double. And again, you figure out what stock you want to use based on whatever batch of analysis you want. If you can assess a price target on it, you come into here. This double finder is not showing you technical analysis. It's purely showing you which options have the lowest percentage move necessary in a stock in order for that option to double. You apply all your other technical analysis to this and all the other gauges to that and determine if the percent to double is something that you feel this stock can hit. Now, why is it showing the August 21st expiration or the September 18th expirations? Let's go up here, and you see the wizard criteria right there? Left click on show. This wizard criteria is showing you the parameters that the search is running on. And the calendar days to option expiration, you can change that. It's defaulted to 45 to 145 days. If you want to change that and go, well, let's look at stocks under 45 days. So you click on 1, you click on 45. Don't click save because it's asking you if you wanted to save this new parameters to a new default wizard. You can change the name and save that if you like, but we're just playing around with this for right now. So don't save anything. Once you make any changes here in your wizard criteria though, scroll down and click search. And the page will refresh and show you underneath all of this options that expire less than 45 days. So now you have a couple of Verizon. Here's a July 24th $60 call at 31 cents per contract. That if you click on that, it'll open up a risk graph page for that. And you can see it right here, $31 cost per contract. What does the stock need to do? If you have to wait until expiration, it needs to be at $60.62 for that option to double. And based off your technical analysis and other analysis that you do, if you believe that that's capable, then you would consider this. The other thing you can do up here, and it's going to show you max trades displayed per stock 5. If you only want to look at the top 1 or 2, change that number. The other thing I want to show you before we wrap is what if we changed it to puts? So if we went lowest percent to double puts, and yeah, we're still on the same page, it's going to change your defaults to 45 to 145 again. You would then just change it back to 1 and 45 to get less than 45 days out to expiration options. Leave everything else the same, and you left click on search. You're going to see that the list changes, and you have some Walmart options here, some Procter & Gamble. There's some VZs in there, some Verizons. Okay, it just depends. Do you believe Verizon higher, believe Verizon lower? Then you choose calls or puts. The last thing to point out, percent to double. It's a negative number now. When you're doing the calls, it has a positive number, meaning the stock needed to go positive or higher X percentage. For puts, you're looking at the stock needing to go lower. How much lower does it need to go? And it's exemplified by a negative number. So it needs to go down 3.66% in order for that Walmart option there to double. That wraps it up on the Double Finder, folks. Hope you've enjoyed that and pay attention for future videos coming your way. Bye for now.